Good day, students. I will be doing the question 2 from the question bank. And question 2 from the question bank is SOAPS LTD, that I will go through it today and analyze for your benefits. So before we go through the question, I would like us to start reading what is required so that we know what are we required to do. We are required to determine the budgeted variable overhead cost per product for both products. So meaning this company has two products. And we are therefore required to determine the production mix that will maximize profit for the following month. So that means here there must be a limiting factor, something to take into account. So there is a limiting factor in that question. Then we go to number C, where we are required to calculate the budgeted break-even point in units of SOAP LTD. 10 marks is the marks for that question. And number D, we are required to calculate the variance, which says calculate the following variance for the months ending 30 November 2015. Sales price variance, sales mix variance, direct material B, packet price variance per product and in total. Then after variable overheads, expenditure variance per product and also in total, take note also in total. Then after variable selling and distribution cost for the hand washing powder, which is only 2 marks of that variance. So now these are the requirements that we are required to do. Then after now, I will analyze the given information immediately after we answer the questions. So it says that SOAPS LTD is a company that processes and distributes washing powders to wholesalers around the Gauteng province. The company currently processes the hand washing powder and the auto washing powder. So they have two washing powder, hand washing powder and the auto washing powder, which is packed in 2 kgs per packets. Then it says the company uses the direct costing method. Take note of that, or the company is using marginal costing for their inventory valuation purposes. The standard per unit based on the monthly budgeted, take note, based on the monthly budgeted processing and sales units is 10,000 units of hand washing powder and 12,000 units of auto washing powder. So they have these two budgeted units, and the minute you have budgeted information and you already know in the requirements that you are to calculate perhaps break-even point, so it becomes very important for us to calculate the production mix or the product mix. So let us check if we are required to calculate any break-even point. Yes, under number C, we're required to calculate the budgeted break-even point in units. So now it means we definitely need to calculate what we call the production or the product mix. So that will be the first workings that I will start with. So now I will have a page for me where I do the workings. And working number 1 will be production mix. Working number 1 will be production mix. And production mix will be for the two products, which is hand washing powder and the auto washing powder. Hand washing powder had 10,000 budgeted units of inventory to be manufactured and to be sold. And auto washing powder had 12,000 units. So when we're calculating production mix, which is our first workings, we look for the common denominator, of which 2,000 does go to 10,000 and it goes 5 times, and also 2,000 does go to 12,000 and it goes 6 times. So our production mix will be 5:6, meaning for every 5 units of hand lotion that are manufactured, 6 units of auto washing lotion are also manufactured and sold. So that will be the production mix. So now we go to the information provided to us now, where they gave us the standard information in units. We are given the selling price per unit, which is 55 Rand and 75 Rand for hand and auto. Then after, we are provided with the direct material, and the direct material is 10 Rand per kg, which is 20 Rand per unit and 30 Rand per unit. So in this case, we need to know how many kgs are required to manufacture 1 unit of hand washing powder and 1 unit of auto washing powder. Because in this case, we are only provided with the cost per unit, which is the cost of material per unit being 20 Rand, and the cost of material A per unit, which is 30 Rand when it comes to product auto. And since we are given this 10 Rand per kg, it means they have said 10 Rand times by something that we don't know, and after that gave them the 20 Rand that we see here. So that's how that 20 Rand was calculated. So now it means we are looking for the middle number, or the calculation, which is the one that we multiplied with in this case. So now, meaning if we convert multiplication, we convert that into a division. So now in calculating the kgs per unit, it will be 20 Rand divided by 10 Rand per kg and 30 Rand divided by 10 Rand per kg. That will give us the number of kgs that are required to complete 1 unit of hand washing powder and auto washing powder. So let us do the calculations on a separate page as usual. So my second workings will be that of direct material. It will be that of direct material. I just want to say the heading is direct material. Then under direct material, I'll have the first product, which is hand washing powder. And what am I looking for under hand washing powder? I am looking for material kgs per unit, meaning material required per unit. Material required per unit, meaning how many kgs of material do I need per unit. It will be cost per unit of 20 Rand divided by the cost per kg of 10 Rand. Then this will be 20 divided by 10. It will be 2 kgs per unit. It will be 2 kgs per unit. And let me just go there and recap. We said it will be 20 Rand divided by the cost per kg, because in order for us to get to this 20 Rand, we would have said 10 Rand times by something in order for us to get to the 20 Rand. So now, if it was 10 Rand times by X, which let me just say a question mark, 10 Rand times by a question mark is equal to 20 Rand. So now we are looking for the question mark, which is the number of kgs. So now, meaning it will be the question mark, which is the kgs, is equal to 20 Rand, as I said to you before, 20 Rand divided by 10 Rand. So that's exactly what we're looking for. And the question mark being the kgs per unit. Therefore, now that's why we get to the 2 kgs per unit. Similarly, with the second product, we do the same thing. We say kgs per unit was multiplied by 10 Rand per kg, and that gave them the amount of 30 Rand that we see here. So now we say we are looking for the kgs. Mathematically, we'll divide by 10 to simplify it, and this will cancel this, and whatever you do on the left hand side, you do it on the right hand side. So that's what we are doing. And also accounting would have taught you that for every debit entry, there should be a credit entry. So kgs per unit will be 30 divided by 10, which will give us 3 kgs per unit, meaning we need 3 kgs to complete 1 unit of auto washing powder. So now we have covered the hand. Therefore, now we go to the auto washing powder. It's still under material, and I'll leave a space because I might need some calculations in the middle there. So now we will have auto washing powder, of which under auto I'm also looking for the material required kgs, material required per unit, meaning how many kgs do I need to complete 1 unit. It will be the cost per unit, which is 30 Rand divided by the cost per kg, and cost per kg being 10 rand, this will give us 3 kgs per unit. 3 kgs per unit, meaning we need 3 kgs to complete 1 unit of auto washing powder. Remember, this is only material A. So now that has been clarified. So that means the cost per kg of material A is the same to hand washing powder and to auto washing powder, meaning the cost of material A is 10 rand and the cost of material A is 10 rand to both products. I just want to clarify that. However, the kgs are different. It is 2 kgs and 3 kgs, if I can put it like that, meaning 10 times by 2 and 10 times by 3. That will give us 20 and 30. Then we go to material B packet, and material B, we are provided with the 2 kgs now, no longer the cost per kg. So now, meaning if we have 2 kgs here, meaning both both products, which is hand and auto, they are using 2 kgs, but the price per kg differs. Similarly with the previous one, because we're provided here with the 10 rand per kg, meaning 10 rand, which is the cost per kg, was the same, but the kgs were different. So now similarly in this case, 2 kgs will be the same, meaning we require 2 kgs of material B for both product hand and also for product auto, but the price per kg is different. So we do the same thing, applying the same principles once again here. What are we looking for? We are looking for the cost per kg, which is cost per kg. We know that it was cost per kg times that by 2 kgs in order for them to get to the amount of 10 rand. So they would have said 2 kgs times by kgs per unit is equal to 10 rand. So now what are we looking for? We are looking for the price or the cost per kg. So now that will be 10 rand here. So what are we looking for? We are looking for the cost. Therefore now we divide by 2 kgs. 2 kgs, we cancel 2 kgs, then we divide again this side by 2 kgs. So now meaning the cost per kg, in this case, the cost per kg will be equal to 10 divided by 2, meaning it will be 5 rand per kg. So now we go and we effect that under material B. So this was material A. Let me just write here as material A. I just don't want to write it somewhere else. Okay, let me write it separately, which is materials. Then this must have been material A. This must have been material A. Then we go and we do material B separately. Then now we will have to calculate the same thing now, which is under material B. Then we have material B. Let me just go to the new page. Material B, still under number 1. Under material B, we still have the same product hand, and we are calculating cost per kg of material B, and the cost per kg for material B will be equal to 10 rand. Divide that by 2 kgs per unit, and this will give us 5 rand per kg, as I have shown the calculations. Then after we go to the second product, which is auto washing powder, and auto washing powder will be the same, which is the cost per kg, and the cost per kg of material B will be equal to the price divided by the kgs per unit. and we have the price being 12 rand, meaning 12 rand divide that by 2, it will give us 12 rand divided by 2 kgs, it will give us 6 rand as the cost per kg of material B. It will be 12 divided by 2 kgs, and that will give us 6 rand per kg. So now these are the calculations for both material A and material B. For both material A and material B. So now we are done with material A and material B, and we go to the next stage. The next stage, we are provided with the direct labor. And now when it comes to direct labor, we are told that direct labor is 50 rand per hour, which is 8 rand 34 per unit and 10 rand per unit. However, employees are being paid 50 rand per hour. So now we need to know the number of hours it takes to complete 1 unit, because we don't know the number of hours, but we only know the rate and the cost per unit. But once again, one thing we know is that for us to get to the 10 rand, we would have said hours per unit times by the rate, which is 50 rand. That will give us 8 rand 34 cents. In order for us to get to this 8 rand 34 cents, we would have done these calculations. Meaning now, if we are looking for hours, we'll divide by the rate per hour, which is 50 rand. Then after we divide by the rate per hour, which is 50 rand. Therefore now that will mean hours per unit, meaning the number of hours it takes to complete 1 unit will be equal to 8 rand 34 cents divided by 50 rand, and this will give us 0.1668 hours per unit, meaning it takes 0.1668 hours per unit or to complete 1 unit. So now let us effect our calculation respectively. So now we go and we do the calculations, which is calculation number 2, labor hours. Direct labor hours. And our labor hours is for the 2 product, which is hand, and that will be the cost of 8 rand 34 cents divided by the rate of 50 rand per hour, and this gives us 0.1668 hours per unit. It will be hours per unit. Then leave some space. Then after we calculate the auto washing powder and the auto washing powder, we know that it is the same rate that employees are being paid. They are being paid the same rate of 50 rand per hour. However, the cost per unit, it is 10 rand. The cost of direct labor is 10 rand. Therefore, now is cost per unit of 10 rand. Divide that by 50 rand. That will give us the number of hours that are required to complete 1 unit of auto washing powder. We have 10 rand per unit. Divide that by 50 rand, and it gives us 0.2 hours. Meaning it takes 0.2 hours to complete 1 unit, meaning 0.2 direct labor hours to complete 1 unit of auto washing powder. So we have completed that. Then we can proceed to the next calculation. I'm leaving spaces because I might need to do some calculations in the middle. Then we go straight to the manufacturing overheads, which is 5 rand per labor hour. However, we don't know how many hours it takes to complete 1 unit of hand lotion, of hand washing powder, and 1 unit of auto washing powder in terms of the manufacturing overheads. So now the same principle will apply, meaning in order for us to get to this 8 rand 66 and this 12 rand per unit, we would have said hours times by the rate per hour, which is 5 rand per hour. That will give us an amount of 8 rand, 66 rand. That is how we calculated that. So there is a missing multiplication here. So now we are looking for hours, because we already have the rate per hour being 5 rand, and we already have the cost per unit, which is 8 rand 66 cents. So we divide by 5 rand because we are looking for hours. 5 rand cancel 5 rand. Then on this side we divide by 5 rand. Therefore now this will give us the number of overheads hours that are taken to complete 1 unit of hand and auto washing powder. It will be 8 rand 66. Divide this by 5 rand per hour, and this gives us 1.732 hours, meaning it takes 1.732 overheads or manufacturing overheads hours to complete 1 unit of hand washing powder. Then after we do the same thing when it comes to auto, we say auto, it will be hours times by the rate per hour, which is 5 rand. As I said to you that the minute you are given an item here, meaning it's the same throughout to both products. So if the rate is 5 rand here, meaning it is 5 rand per hour to hand washing powder and 5 rand per hour to auto washing powder. But what will be different will be the number of hours. And I've been showing you that. I think now it should be very clear. Times that by 5 rand per hour. Therefore now it gave them the amount of 12 rand, which is provided there as 12 rand. So now what are we looking for? We are looking for the hours, not hours times by 5. So we divide by 5, and whatever you do on the left hand side, you do it on the right hand side. So now meaning our hours will be 12 divide that by 5 rand. 12 divided by 5, it will be 2.4 hours, meaning it takes 2.4 hours of manufacturing overheads to complete 1 unit of auto washing powder. So now let us go and effect these calculations under our manufacturing overheads. This was labor hours. Then after now we go to number 3, working number 3, which is manufacturing overheads. Manufacturing overheads. Our manufacturing overheads, remember again, they are provided in total. So we have hand, and under hand we calculate hours per unit. Hours per unit. And our hours per unit is 8 rand 66 cents. Divide this by 5 rand per hour. Just confirm if my figures are right. Yes, which gave us 1.732 hours. 1.732 hours. 732 hours per unit. 732 hours per unit. Then we go to the auto washing powder. Auto washing powder, we are calculating the same hours per unit, and our hours per unit were provided to be 12 rand. Let me confirm if it's 12 rand or 10 rand. It is exactly 12 rand. 12 rand divided by 5, which is 5 rand per unit. 5 rand, which is 5 rand per hour. 5 rand per hour gave us 2.4 hours. It gave us 2.4 hours. Gave us 2.4 hours. So now we have calculated all the hours that are required to complete 1 unit of hand, and all the hours that are required to complete 1 unit of auto washing powder. Now take note of the manufacturing overheads, because our manufacturing overheads are not clearly stated how much or which portion is fixed and which portion is variable. So remember, we know that direct material is a variable cost, and we also know that direct material B is also a variable cost, and we are also aware that direct labor is a variable cost. But for this one, we don't know how much portion is fixed, and we don't know also how much portion of that is variable. So there's a portion that should be fixed, there's a portion that's supposed to be variable. So meaning there's still some calculation that we need to take into account based obviously on the information that will be provided to us. But whenever it is silent regarding manufacturing overheads like this, we know that there will be further information clarifying us of the portion fixed and the portion being variable. Then after again we have selling and distribution cost, which is 3 Rand per unit and 3 Rand per unit. And again, when it comes to selling and distribution, they also have to clarify to us how much of the portion is fixed and how much of the portion of that is variable, because selling and distribution can have the fixed portion and also the variable portion, which that cost will be called the mixed cost if it has those features. Then now we go to number 1, because we've done at least the basics of the analysis. They say direct material A is available in limited quantities, which is 50,000 kgs, will be available to SOAPS LTD per month, meaning in this case, this is the limiting factor. This is the limiting factor, meaning we are limited in terms of material, that we cannot have more than 50,000 per month. So now even if we want to manufacture using kgs above 50,000 kgs, we cannot exceed that. So when you go to that question, we will be dealing with that 50,000 kgs as the limiting factor. So now we come to number 2, and number 2 says to us that the total budgeted fixed manufacturing overheads per month is 150,000 rands. Take note of that. They say our fixed manufacturing overheads per month, it is 50,000 rands. It is 150,000 rands, I mean. So now if we look at this, this is the total, as they said, is the total. And our manufacturing overheads on the standard information, it was given per unit and per unit. So now we need to calculate our manufacturing overheads from the standard information as the total, where we say 8 Rand 66 times that by 10,000, and we say 12 Rand times that by 12,000 units, so that we get to the total manufacturing overheads, which that will be 8.66 times by 10,000 units. So now the total budgeted fixed manufacturing, the total budgeted manufacturing overheads in total will be 86,600 for the hand washing powder. And for the auto washing powder, it will be 12 times by 12,000 units. This will give us 144,000 rands. This will be 144,000 rands. So now this will be the total manufacturing overheads budgeted. And remember, these two figures, they include fixed portion and the variable portion. So now we need to combine all of them. Then after we deduct the portion that is fixed, and whatever is the remainder becomes variable. So now let us go to the calculations of the manufacturing overheads. Under manufacturing overheads, we need to calculate the total manufacturing overheads. Total overheads, which is total manufacturing overheads. And our total manufacturing overheads, we have it for the two products, which is hand washing powder. And hand washing powder, we said it will be 8 Rand 66 cents times by 10,000 units, which will give us 86,600 rands. And for the auto washing powder, we said that it will be 12 Rand per unit times by 12,000 budgeted units to be manufactured and sold. And that will give us 144,000 rands. So now if we add the two, it will be plus 86,600, and this will give us a total of 230,600 rands. 230,600 rands. So now from here we have calculated the total overheads, meaning both the fixed and the variable portion is included in this calculation. So now from here we will need to deduct the portion that is fixed so that we know how much of this is variable. So now this is the total, then we say less fixed cost, because we know that 150,000 is fixed. We less fixed cost, which is fixed manufacturing overheads of 150,000 rands. Let me just go back so that I don't miss you behind. Remember, we said 86,600 and 144,000 is the total manufacturing overheads inclusive of the fixed cost, because this manufacturing overheads, which is given to us as 8.64, this figure that are provided to us, they are inclusive, or they include the fixed and the variable element. So now if we multiply the cost per unit by the number of units, and also the cost per unit by the number of units, that will give us the total manufacturing overheads, all of them in total, including fixed and the variable. So now, since we know that the total fixed portion is 150,000, so we deduct that, so that whatever is left will only be the variable portion. So we have deducted the 150,000. So now whatever will be left will be the variable overheads, which is variable manufacturing overheads. And our variable manufacturing overheads will be 230,600 minus 150,000 rands, and this will give us 80,600 rands. So now this will be our variable overheads, which is in total combination of hand washing powder and the auto washing powder. And now from here, remember there was a question that required us to calculate the overhead rate per unit. So now for us to calculate our overheads per unit, we will first need to know our overhead cost per hour. Why? Because our overheads are absorbed on the labor hours. Let us go and check that. Our overheads are absorbed on or based on labor hours. So now, meaning we need to calculate our total budgeted overhead hours, because we have already calculated, remember, we have already calculated our manufacturing overheads hours per unit, which is 1.732 hours per unit, and we calculated again 2.4 hours. So now in this case we need to calculate our budgeted overhead hours. Let us calculate the hours so that we divide by the hours and we get to the rate of overheads per labor hour. So now calculating our budgeted hours. Our budgeted hours will be based on the budgeted units, which is 10,000 units, times that by 1.732. It will give us the number of hours that we budget to spend, which is 10,000 hours, times this by 1.732, which is 17,320 hours. Meaning in this case we need to spend 17,320 hours in order to manufacture 10,000 units. Remember, 10,000 is the budgeted units. And for the auto, we had 12,000 budgeted units. So now when we're calculating our budgeted hours, it means it will be budgeted units of 12,000 times this by 2.4. Remember, 2.4 is the number of hours it takes to complete one unit. So now because of that, we times by the hours per unit, then that will give us the total hours that are required to complete the 12,000 units. 2.4 times by 12,000 units, it gives us 28,800 hours. So now that we have the hours, So now we can say, okay, our hours that are required to manufacture the given units, it is a sum of 17,320 for hand washing powder and a sum of 28,800 hours of hours to complete the auto washing powder. So now let us divide here by hours. Divide by hours. Divide by hours. We divide by hours, and our hours will be for hand washing powder, and hand washing powder is 17,320 hours, and auto washing powder has 28,800 hours. These are the total hours that are required. So let me just calculate the total of that. Plus 17,320. This gives us 46,120. Now, remember, go back again to the question so that we see which requirement are we exactly at now. Under number A, we were required to determine the budgeted variable overhead cost per product, meaning per unit for both the products. And our manufacturing overheads were provided to us. Our manufacturing overheads were given to us per unit as 8 Rand 66 and 12 Rand. And that was manufacturing overheads, not the variable ones. It was combination of fixed and variable. But in this case, they are very specific, variable. So now we needed to calculate our total manufacturing overheads as we did. Then after we minus the portion that is fixed, and whatever is variable is the one that they are looking for. But it must be a cost per product, meaning a cost per unit that we are looking for. A cost per product or per unit. So now that is why we calculated our total manufacturing overheads. And our total manufacturing overheads is the amount of 230,000. This is the total overheads. This is the total overheads. Remember, the total overheads is the combination of fixed plus the variable portion. So this is the combination of fixed and variable cost in terms of overheads. They are all combined there. Why am I saying they are combined there? Just want to explain this very well. The reason why I'm saying these are combined in there is because our manufacturing overheads, in this case, they did not say they are fixed or variable, meaning this amount combined both fixed and variable. So now that's why when we multiply this by an amount of 10,000, we got the total overheads. And when we multiply this by 12,000, we got the total manufacturing overheads. Then after we deducted the portion that is fixed, because they said 150,000 is fixed. So now whatever is the remainder, which is the 80,600, is the variable portion. So now that one is the variable one. So we need to say, okay, our variable overheads are absorbed using what base? And we know that our variable overheads are absorbed using labor hours. Why am I saying it's based on labor hours? Is because the rate of overhead is per hour. The rate of overhead is per hour. Look at that. They said 5 Rand per labor hour. So now, meaning our overheads are based on labor hours. So now if they are based on labor hours, meaning I need to know the number of hours it takes to complete 1 unit of hand washing powder. And I also need to know the number of hours it takes to complete 1 unit of auto washing powder. And we did calculate the hours as 1.732 per unit and 2.4 hours. So now if I have these hours per unit, remember these are the hours per unit. So I need to say these hours per unit times by the number of units that I want to manufacture, so that I get to 86,000 as I get to 17,320 hours. Then I say I also need the total hours it takes to complete 1 unit of auto. Then I multiply that by the number of units that I budget to manufacture and sell, and this gives me 28,800 hours. Then I say, okay, because now I have the variable cost, which is 80,600, the variable component of my overheads. So now I need to divide it by the budgeted total labor hours, or the budgeted total labor hours, in fact, so that I get to my variable overhead cost based on the labor rate, or meaning per hour. So now that's why I have done all those calculations, and now I'm dividing by the hours because my overheads are absorbed using labor hours. So I have 80,600, which is variable overheads, divide by 46,120, and this gives me 1.75, which is overhead rate per labor hour, or per hour. So that is 1.75 per hour. So now if we have our overhead per hour, and this is the overhead rate per hour, then we need to say now how many hours does it take to complete 1 unit. We definitely know how many hours it takes to complete 1 unit. We know that when it comes to the hand washing powder, it takes 1.732 hours to complete 1 unit. And we also know that it takes 2.4 hours to complete 1 unit of auto washing powder. So now if we say the number of hours per unit, we multiply this by the rate per hour. Remember, this rate is per hour, and this is the number of hours per unit. So now we have common units or similar units. So now we can just multiply that in order for us to get to answer the first requirement, which is requirement number A. So now let me go straight to answering my requirement number A. So now I'm calculating the cost per unit, which is specifically overhead cost per unit. Overhead cost per unit. Oh, variable one, I want to be clear with that. Sorry to highlight it late, which is variable overhead cost per unit. And my variable overhead cost per unit is for hand, it will be 1.75, which is per hour, times by 1.732, which is the number of hours it takes to complete 1 unit. Then after I go to the auto washing powder, and auto washing powder will be the same rate, 1.75, times this by 2.4 hours. Therefore now let us check how much will be the final answer. Remember, I'm taking the rate per hour, which is 1.75, which is the variable. Don't forget, this is the variable portion. Then after I multiply that by the overhead hours per unit, which is 1.32 hours and 2.4 hours. Then now by doing so, that will give me the cost per unit. So we say times that by 1.732, it gives me 3 rand 3 cents. 3 rand 3 cents. Second one is 1.75, times this by 2.4 hours, and it will be 4 rand 20 cents per unit. So now this is the response to question 1. So don't forget that you have to make a reference for your workings. This is in reference to working number. That would be working number 3, because my manufacturing overheads are under working number 3. So that will be working 3. That will be working 3. So that the examiner knows where the calculations are coming from. So now we have responded correctly in the calculation of the first requirements, where we were required to calculate the variable manufacturing overheads per unit, which was requirement number 8. 10 marks is already in the pocket. Then after, we proceed to number B. Number B says that determine the production mix that will maximize the profit for the month. And we know that if they speak of the production mix that will maximize profit for the month, it means that we have definitely a limiting factor in this case. Now, you might note that before I complete this, I have not read yet the actual information, because I don't need actual information now, so I only read what is relevant for the response of the first questions. I will respond to this one later on when there is a need for me to take into account the actual information. Now I am only still here, and I am able to respond to most of the questions already. So now they already told me that there was a limiting factor, which is the number of kgs. So now whenever there is a limiting factor, first of all, you need to test or affirm that there is really a limiting factor. So now for us to test or affirm that there is really a limiting factor, we need to then do some calculations. And in doing some, remember we're responding to question 2. In doing those calculations, we need to know how many kgs of material are required, because our limiting factor is kgs of material. Required kgs of material. Required kgs of material. And we say now we have two products. We have two products, which is hand and auto, and we plan to manufacture 10,000 kgs. Sorry, 10,000 units. This is units times this by kgs per unit. We need to know how many kgs are required per unit. And we know that we had material A, of which material A required 2 kgs per unit, and material B required 3 kgs per unit. So now we have to say 10,000 times by 2 and 10,000 times that by 3. So this is exactly where we are. So we multiply here by 2 kgs, and here we have 12,000, and multiply 12,000 by 3 kgs. So now we proceed on that note. 12,000 units is the units the company that budgeted to manufacture, and we times this by 3 kgs, which is 2 kgs and 3 kgs. Therefore, now this will give us the kgs that are needed to manufacture 10,000 units, and the kgs that are needed to manufacture 12,000 kgs. So now we say 10,000 times this by 2 kgs per unit, it gives us 20,000 kgs that are required. Remember, these are kgs. Then this one will be 12,000 times by 3, which is 36,000 kgs that are required to complete 12,000 units. Then after, we say how much is the total. The total will be 56,000 kgs, meaning the company needs 56,000 kgs in order for it to manufacture the 12,000 units and the 10,000 units of material A and of product A and product B, which is hand and auto washing powder. We're using material A because material A has different kgs, 2 kgs and 3 kgs, than material B that only had 2 kgs for both units. Then after, we say how much is available. Remember, this is what we need, which is material needed or material required. Material needed is that how much is available. The only material that is available is only 50,000 kgs. This is what is available. They said we only have 50,000 kgs per month. So this is what is available, and I normally like to put it in brackets so that I can determine if is there any limiting factor. Remember, this is what we need, but this is what is available. Definitely there is a shortfall here of 6,000 kgs. So now 56 minus 50,000 will give us 6,000 kgs. So now the 6,000 kgs is a shortfall. So the question is, do we have a limiting factor? Yes. Do we have a shortfall? Yes. Do we have a bottleneck? Yes, there's a bottleneck of 6,000 kgs. So now the minute you have done this test, then after now you have to rank your limiting factor, because in this case now we have limited resources in terms of material. Because of this limitation, we need to rank the product that makes more profit based on the limiting factor, meaning the product that makes more profit, or which is a marginal profit per limiting factor, meaning per kgs of material in this case. So now calculating that, we have to have two products, which is our two products that we're dealing with, hand and auto washing powder. And in calculating the contribution per limiting factor, it will be sales per unit. Our selling price per unit was given as 55 Rand and 75 Rand. Let me just confirm that we had 55 Rand and 75 Rand. Then after we have our variable cost, we less variable cost, and our variable cost will be made of direct material, and our direct material is divided into material A and material B. We have material A and material B. Material A cost per unit was 20 Rand and 30 Rand. Material B per unit was 10 Rand and 12 Rand. 20 and 30, 10 and 12. We are calculating a contribution per unit. Here we have 10 and 12 Rand per unit. Therefore now we have to calculate the total of this material separately. This will be 30 Rand and this will be 42 Rand. So that is our direct material. Then after we record direct labor and we check the price of the direct labor per unit, and our direct labor was 8.34 and 10 Rand. 8.34 and 10 Rand. 8.34 and 10 Rand. Then after we have our variable cost. We have our variable cost. Then we know that our variable cost, which is variable manufacturing overheads, we calculated that to be 3 Rand 3 cents, and let me confirm, we had 3 Rand 3 cents. Yes, we had the 3 Rand 3 cents under the first requirement. There was variable overhead per unit 3 Rand 3 cents and 4 Rand 20 cents. So that is exactly what we're recording, 3 Rand 3 cents, which is variable overhead, and 4 Rand 20 cents. Then after, there's supposed to be another variable cost, which is selling and distribution. Selling and distribution. But we still need to get some information about selling and distribution, if how much portion of that is fixed and how much portion of that is variable. So since we ended here, it said that these are allocated in the ratio of 2:1. They are referring to fixed cost, remember, and it says between auto washing powder and hand washing powder. And after number 3 says the variable component of the selling and distribution is 1 Rand per unit. So meaning the variable selling and distribution is 1 rand per unit. So that is 1 rand and that is 1 rand. Then now from here we can get to our contribution per unit. Contribution per unit. Our contribution per unit will be 30 rand first, plus 8 rand 34 cents, plus 3.03, plus 1 rand. This gives us a total of 42 rand 37 cents, minus 55 rand. This gives us 12 rand 63 cents. Then after we say 42 plus 10 rand plus 4 rand 20 plus 1 rand, that gives us a total of variable cost of 57 rand 20 cents. And we subtract that from 75 and it gives us 17 rand 80 cents. So now we have calculated our contribution. Therefore now we need to divide by the limiting factor per unit. Remember, what is our limiting factor? Our limiting factor is kgs of material. So we divide by kgs per unit. Kgs per unit. That's what we divide with. We know that hand washing powder requires 2 kgs per unit. Let's just go and confirm that. Hand washing powder requires 2 kg and auto washing powder requires 3 kgs. So now we divide always by the limiting factor per unit. And our limiting factor per unit is 2 kgs per unit. 2 kgs. And we divide here by 3 kgs. So after we have divided by that, it will give us now the contribution per kg, meaning the contribution per limiting factor, because the limiting factor is kgs. So now it will give us the contribution per kg. And our contribution, remember, the first product is hand washing powder, which and the second one is auto washing powder. Then we can say divide by 3 here and we get 5 rand 93 cents. And for the first one, which was 12 rand 63 cents, divide this by 2, it gives us 6 rand 32 cents. So now we have divided by the limiting factor per unit. And now after we have divided by the limiting factor per unit, now we need to do the rankings of our product. After we do the rankings, then after we can allocate the limited resources. Now, based on the contribution, let me just go back to the previous page first. Here we have seen that using the contribution per unit, if we look at the contribution per unit, the second product, which is hand washing powder, is making more profit because it's 17 rand 80 cents. And hand washing powder is only making a contribution of 12 rand 63 cents towards the fixed cost. So now from that perspective, one can conclude that the auto washing powder product is making more contribution, therefore now it must be ranked first. But we are not ranking based on the contribution per unit, because units in this case is not the limiting factor, but the limiting factor is the material. So now after we have divided by the limiting factor, which is 3 kgs of material per unit and 2 kgs of material per unit, we realize that no. This product, which is auto washing powder, is not making more contribution per limiting factor than a hand washing powder. However, the one that makes bigger contribution or bigger, more marginal profit is hand washing powder. So now you can see the difference, that the ranking must be always based on the limiting factor, not per unit, unless the units is the limiting factor. So now we do the rankings now. E-rankings mean this will be ranked number 1, this will be ranked number 2. Then after we have done the ranking, then we do the allocation now. Meaning we can allocate these limited resources, allocation to all products. Allocation to all products. Then after we say available for all or for both products, available for both products. How many kgs are available? The kgs that are available is 50,000 kgs. That is all that is available. We are limited to 50,000 kgs being the limiting factor. That is what is available. We only have 50,000 that is available. That is exactly where we are. So you take the limiting factor and you record that as what is available for both products. Then after we allocate. Then now under allocate, we say allocation for the first product that was ranked number 1, which is allocation for hand washing powder. Remember, this is hand, this is auto. So now allocation for hand, then we say how many kgs of material hand washing powder requires in order to complete their production. Hand washing powder requires 20,000 kgs. Then the question is, do we have 20,000 kgs out of the available? Yes, we do have the 20,000. Therefore, now we can record that 20,000 kgs. Remember, it's in kgs. Then now we say the remainder will be available for the next product, which is available and allocated to auto, because this one will be allocated to the remaining product. Then I will say 50 minus 20 will give us 30,000 kgs. Remember, these are kgs. Don't misread it with the units, because kgs are bigger in this case than the unit that you want to manufacture. We need more kgs in order to manufacture the less number of units. So now we say, okay, this is the number of kgs of material that are available to manufacture the auto washing powder. Then the question is, how many kgs of material does auto washing powder require? Auto washing powder requires how many? 36,000 kg. That's what they require. Now, how much do we have? We only have 30,000 kgs. Then the question is now, how many units can be manufactured out of the 30,000 kgs? That is the question that now we are to answer. Because of the limiting factor, we cannot manufacture using the full total of 36,000 kgs, but we can only manufacture using the total of 30,000 kgs, because this product was ranked as the second. So now there is not enough resources, because it does not make more profit per limiting factor, meaning per kg, though it makes more profit or marginal profit per unit. But remember, our limiting resource or limited resource is at the kgs. So now we say units to be manufactured or units to be produced. Then we say the number of units that can be produced is 30,000 kgs divided by the number of kgs per unit. Divide that by number of kgs per unit. And after we divided that by the number of kgs per unit, we will get to know how many units can be manufactured out of the 30,000 kgs. So we say 30,000 kgs divide by 3, that means only 10,000 units can be manufactured. So now the question is, how many units auto washing powder was budgeted to be manufactured and sold? They budgeted to manufacture 12,000 units, but because of the limiting factor, we cannot be able to manufacture the 12,000 but only 10,000 units. So now this is exactly how you calculate the production mix that will maximize the profit. So now we have completed the second requirement, and now we can go to the third requirement. We can go now to the third requirement. Third requirement, let's go once again and see what else is required. Please, under number 2, don't forget that the fixed cost of 150,000 is split in a ratio of 2:1, but this is not yet important. And also note that our selling and distribution are split into 1 rand, which is variable, and 2 rand, which is fixed, because we have 3 rand here. So now if in that 3 rand, 1 rand is variable, therefore we say minus 1 rand, therefore 2 rand will be fixed. Then we also minus 1 here, therefore now 2 rand will be fixed. So now this is the fixed portion per unit of selling and distribution, and this is the fixed portion per unit of selling and distribution. Then now we proceed to the next requirement to see if what can we do in the next requirement. In the next requirement, it says calculate the break-even point in units of SOAP LTD, and that is also another 10 marks. So now in calculating the fixed cost, in the case where there are 2 products that have been provided into your scenario, which is hand and auto, we need the production mix. If you remember that our production mix was calculated as 5:6, if you still remember that. So now let us first calculate or go and check how much was our production mix. Our production mix was 5:6. So now we need to calculate our contribution and multiply that by the production mix. And we have already calculated our contribution. There's no need for us to go back. Fixed cost, if it's 2 products, you need to calculate your product mix. And we already have our contribution. So we don't have to recalculate our contribution. And we already have our product mix. We just have to say contribution, term that by the product mix. Then after we just respond to the question. So now we are calculating weighted average contribution per unit. So we have already the 2 products, which is hand and the auto. And we already have contribution per unit. And our contribution per unit was 12.63 and 17.80. Let me just confirm that. Our contribution per unit was 12.60 and 17.80, those 2. So that is where you begin when you're calculating break-even point for 2 products. Then after we times this by production mix. We term this by production mix, and production mix is 5:6. Then we say 12.63 times by 5. It gives us 63 rand 15 cents. Then we say 17.8 times by 6, and it gives us 110.80 cents. Then now our total average contribution will be the sum of the two contribution. It will be equal to 63 rand 15 cents plus 106 rand 80 cents. Then that will be our contribution weighted plus 63 rand 15 cents, and it gives us 169 rand 95 cents. After that, we need to take into account the total fixed cost. These are just my workings. Then we need to calculate the total fixed cost. Our total fixed cost is made of 150,000. 150,000 was given to us. They told us plainly or very clear that our fixed manufacturing overheads is an amount of 150,000 rands. That was given to us. We don't need to split it now in that ratio of 2:1, not yet. And they said variable selling and distribution, 1 rand is variable. So now we said if that means is 2 rand will be fixed if 1 rand is variable. So 2 rand is fixed and 2 rand is fixed for both products. So we need to say 2 rand, which is auto, times by the number of units of 12,000. And also say 2 rand times that by budgeted units. Therefore now this will be 2 times by 12,000. This will give us 24,000 rands. And 2 times by 10,000. This will give us 20,000 rands. So now meaning our total selling and distribution will be the sum of 24,000 plus 20,000, which will give us 44,000 rands, which is our total selling and distribution. Then now we go to our workings. We say it's 150,000 plus 2 rand times by 10,000, close brackets, bigger brackets, plus 2 rand times this by 12,000 units, close brackets and close the bigger brackets, because I need to know all of my fixed cost. Therefore my fixed cost will be 150,000 plus 44,000 rands, which I have already shown you that is 24,000 plus 20,000. Therefore now we have 150,000 plus 44,000. Therefore my total fixed cost is 194,000 rands. So now I've calculated all my fixed cost and I've calculated my weighted average contribution per unit. And these are the components of calculating the break-even point. In this case being the budgeted break-even point. So I can respond now to question number C, where I say break-even point or break-even units, which is equal to fixed cost, all the fixed cost, divide by contribution per unit. Contribution per unit. And my fixed cost is given as 194,000. Divide this by, let me check the workings there. So this will have to be another random working. Maybe you can just say working number 4, because it was just random from the question and we collected information from different angles. So we can say 194,000, which is working number 4. Divide that by the contribution per unit that we calculated to be 169.95. 169.95. 169.95. Then we determine our units. 194,000 divided by 169.95, and this gives us 1142, 1142 units. And remember, this is for both units, or for both product, which is hand and auto washing powder. So now we need to know the break-even point for each product, meaning separate for hand, it will be 1142 times by 5. Where is 5 coming from? 5 is our production mix, don't forget. We multiply by the production mix at the end. When you want to determine now the number of units that must be manufactured in order for the company to be at the break-even point, it will be the 5 and the 6. You multiply by that at the end. So now we multiply that by 5. Then it will give us contribution. It will give us a break-even point for the first product, which is hand. 5,708. Then for auto washing powder, it will be 1,142 times by 6. 1,142 times this by 6. It gives us 6,852 units. So now we have calculated the units that the company must manufacture in order for them to be at the break-even point for both the products. This is in units, break-even point in units. Break-even point in units. And we have by that responded correctly to the third requirement. And now we go to the fourth requirement, which is the last one, just variance, then after we are done. So now the first variance, which is under number D, is the sales price variance for auto washing powder only, for auto washing powder. So now the minute you do variance, then you need to know the actual information now. So now I can go to the actual information. It's necessary. Try not to mix information, because most of the time you'll be provided with a whole lot of knowledge or information that is in front of you. And to analyze it all at the same time, it will confuse you. Just do it bit by bit. And most of the time, budgeted information will be enough for you to respond to maybe 50% of the question in that question. So now we go to the actual information now, which is mostly important for the analysis of the variance. Then we have units that were processed and sold, 8,000 units and 10,000 units. Selling price is 56 and 72. Direct material A is 144,000 and 320. Remember, the figures here are given in total. This is the total and these are totals. Previously, the standard information was per unit. So now we are provided with the total information throughout, total information regarding the cost of the product. Then now we go and take note that material B used the same 2 kgs, meaning whatever was on standard planned to be mixed, they mixed the same kgs per unit, which was 2 kgs per unit. Then after now, we go to the sentence that says the actual fixed, take note, the actual fixed manufacturing overheads and fixed selling and distribution cost for the month were as budgeted. Remember, our actual fixed cost, I want to highlight that first. Our fixed cost were budgeted to be 50,000, and they said to us that fixed cost must be split in a ratio of 2:1 between auto and hand washing powder. So now meaning our fixed cost, let me calculate the fixed cost and split them. our fixed cost were split in the ratio. When it comes to auto, it will be 150,000 times by 2 over 3. Remember, this is the ratio. So for auto, it will be 100,000 rands. Then our fixed cost for auto will be 100,000 rands because they are split in a ratio of 2:1. Just want to highlight that. In a ratio of 2:1. That is how they are split between auto washing powder and hand, meaning the 2 represent auto and the 1 represent the hand washing powder. Then now we allocate hand. Obviously, if auto is 100,000, then the rest, which is 50,000, will be for the hand washing powder. Therefore, now that will be hand, and fixed cost for that will be 150,000 rands times by 1 over 3, and by doing so, you will get 50,000 rands of the budgeted fixed cost for hand and for auto washing powder. So now, having that in mind and reading this sentence, it will make sense now that the actual fixed manufacturing overheads and fixed selling and distribution costs for the month were as budgeted. Remember, they budgeted to incur fixed cost of 100,000 for auto and 50,000 for hand. So now they say that remained the same. So now if that remained the same, it means under actual information now, we remember had our overheads as 90,000 rands. And we know that under hand there is 50,000 that is allocated there. 50,000, which is fixed. And there is also 50,000 here, which is 100,000. So the variable portion, meaning the actual variable portion that will remain here, it will be 40,000 rands, and also here it will be 40,000 rands. This is the variable and this is the variable cost. It will be 40,000 rands, because if you say 140 minus 100 to get 40,000, and you say 90,000 minus 50,000, you get 40,000. So the actual variable cost were 40,000 for both the products. So now we still need perhaps to calculate the variance for the variable manufacturing overheads to determine if did we over or under estimate our variable manufacturing overheads. So that analysis, I think now is enough for us to go to the first variance, which is the sales price variance. Sales price variance is very simple. It's only for the auto washing powder. So now we just go and you say, okay, auto washing powder, where are you? Here the selling price for auto washing powder, which is 72 rand. And we know that the budgeted selling price for auto washing powder was 75 rand. Therefore now we say actual minus standard or budgeted, and we multiply that the actual units that were manufactured, in fact were sold, which is 10,000 units. So we start on a new page so that all of this requirement is only on one page. This was requirement number D. Just to confirm that, requirement number D. Then under number D, we have one being sales price variance. And my sales price variance will be the actual price of 72 rand minus the standard price of 75 rand times by actual units that were sold. So it will be 72 minus 75 times by 10,000 units, meaning 30,000 will be an unfavorable variance. Why unfavorable? Because we sold the units at 72 rand instead of 75 rand. Even if you wanted, you could have said actual minus standard. We sold for 72 instead of 75, which we budgeted. So we receive less revenue than we anticipated. So we had the actual price of 72 rand minus the budgeted price of 75 rand So now we made less income than we anticipated. So that is not good for the company. Hence the variance become unfavorable. And remember, the sign of the variance does not determine the meaning of either favorable or unfavorable. So this will be A, representing adverse variance. That would be adverse variance. You can just say A for adverse. Then we look for the second variance that is required for us. The second variance that we are required to do is the variance on the sales mix, which is sales mix. Sales mix can only be there if there are two products. Sales mix can only be there if there are two products. Let me say that once again. If there is one product, there will never be sales mix variance. So now under our sales mix variance, we have it for two products, which will be hand washing powder and auto washing powder. We need here budgeted. I'm not going to detail in terms of description. Budgeted. Then after we have actual. And after budgeted and having actual, or let me start with the actual because we prefer to start with the actual normally in this variance. So now, we have standard, no problem. Then after we have actual, then budgeted. Yes, actual and budgeted, where we compare the actual sales, actual and budgeted. Then after we multiply this variance by the contribution, term this by contribution. Then after we get to the total that they required. I did not provide enough details, but I'll just explain the details. Under actual, there's nothing to worry because we have 8,000 for hand and we have 10,000 units that they budgeted to sell or they actually sold. And our actual sales in units that were processed and sold, it was 8,000 and 10,000. So that's where this is coming from. Under the actual information, you take actual as it was provided. Under budgeted, in fact, we take what I call standard sales, though they normally call it budgeted units based on actual information, but I normally say standard sales. And my standard sales is allocating the actual sales using the budgeted information. Standard sales, of which my standard sales will be calculated by saying the total of the units that were actually sold was 18,000. So now what we do, we split our actual sales using the budgeted units. We split our actual sales, or we apportion or we allocate our actual sales using the budgeted information, or we're using the budgeted sales. Remember, we budgeted to manufacture and sell 10,000 units. That is what we budgeted. We budgeted to manufacture 10,000 units and 12,000 units. So now I'm saying we have to say 10,000 plus 12,000 will give us 22,000 units. So now this will be the total apportionment. So when I'm saying we allocate our actual sales, in other words, I'm saying total actual sales is 18,000, which is that 18,000. We term this by budgeted units for hand washing powder, divide by total units of 22,000 budgeted. The total units budgeted being 10,000 and 12,000 budgeted. So that is how you calculate the number of units whenever you are dealing with the sales mix variance. You take your budgeted units, you use that as the base to allocate your actual sales, and that becomes the standard sales or the budgeted sales. So now meaning allocation for the hand washing powder will be 18,000, which is actually units sold, times by 10,000, which is units for hand washing powder, divide by total units, meaning hand and auto washing powder, 22,000, and this gives us 81 or 18 units. 8,110 or is 81,818 units. So now this will be the total units. Let me just recalculate that. We have 18,000 times this by 10,000, divide by 12,000, sorry, divide by 22,000. This gives us 8182, yes, like this figure now is very big, 8182 units. Then after now for the auto washing powder, would still be the actual units that were sold in total, which is the 18,000 units that were sold. Then we times by the budgeted units to be sold for the second product, which is auto, and we divide that by the total budgeted units to be sold. Therefore now that will be the number of units budgeted for the second product, which is auto washing powder. Times this by 12,000, divide by 22,000. It gives me 9819 units. So now I have to allocate exactly like that, 8182, 8182, 8182, and 9,819. My contribution was 12 rand 63 cents, nothing has changed. And another one was 17 rand 80 cents, nothing has changed. Let me go and refresh your contribution per unit. It was 12 rand 63 and 17 rand 80. Where was this coming from? It was coming from our original calculation that we did here at the bottom, 12 rand 63 and 17 rand 80 cents. Nothing has changed. You take your contribution as it is. And remember, if the company was using absorption costing, then the contribution would have taken into account fixed cost manufacturing per unit. So we have 8,000 minus 8182 units, times this by 12.63. It gives us an unfavorable variance of 2,299. Then after we have 10,000 minus 9,819, and we multiply this by 17.80, and this gives us a favorable variance of 3,222. This is adverse, this is favorable. Then the total would be minus 2,299. Then the net will be a favorable variance of 923, which is 3,222 minus 2,299. I get 923. So now this was the, let me just confirm this. We have 10,000 units minus 9,819, 9,819. Then we times this by 17.80, 3,222. So which is 3,222, 98. Then after we say minus 2,299, which gives us 923. 23. So that will be our variance, which is the total of that variance will be a favorable variance. Then after now, we proceed to the next part, and the next part, let me just confirm if I have done all the calculations correct. For the second one, mostly 18,000 times by 12,000 divide by 22,000. Okay, that was supposed to be 18, not 19. So that is 18, not 19. 18, not 19. Just change the color to show where the change was. Just rounding off, I took it as 19. Then after I will say minus to this 10,000, we times that by 17.80 cents, and this gives us 3,236. Okay, 3,236, and we say plus 2,299. It gives us 937. It gives us 937. Then that will be our variance. Obviously, rounding off might make some small difference. So now this will be 937. Then now we have calculated the variance that was required, which is variance number 2. Then we go to the third variance that was also required for us to do. Remember, they required us to also calculate the total for this, so hence I provided the column for the total. Then we go to the third variance. The third variance that we are required to analyze is the direct material B variance, which is price variance per product and in total, meaning is for each product and also in total. This is the easy variance, honestly. So now we are doing the third variance, number 3, which is material B price. Material B price variance. Material B price variance. And this will be standard price minus actual price times by actual quantity purchased. This will give us the variance at the end. Remember, it has to be for hand and for auto. The standard price, remember, the standard price has to be per kg. Let me get, if can I get all the information per kg first, under the actual. Under the actual, okay, I have 2 kgs per unit and I have 80,000. So now, meaning for them to get to the 80,000, they would have said 2 kgs times by the price per kg, and that gave them 80,000 units. So if I say 80,000 divided by 2, it is going to give me the cost. It will give me the cost, which I'm not looking for the cost, because if I divide the rent by the kg, then I'll get the value. I'm not looking for the value. I'm looking for I'm looking for the value, not for the for the kgs which they are provided. So in this case, we can just say 80,000 divided by 2 kgs, which will be 40,000 kgs. And I'm not looking for the kgs. I'm not looking for this total 40,000, but I'm looking for the total the cost per kg. So now in this case, we cannot calculate the actual cost per kg. And if we cannot calculate the actual cost per kg, it's either we can say 2 kgs per unit, times this by 8,000 units, because it takes they require 2 kgs to complete 1 unit. So if I say 2 kgs times by 8,000, this will give me 16,000 kgs for product hand. Then if I say 2 kg times by 10,000 units, this will give me 20,000 kgs, meaning these are the kgs that were used to manufacture the 8,000 units. So now from there, I can then say, okay, I have total kgs and I have total cost. If I say total cost divide by total kg, I'll get the cost, actual cost per kg. Meaning now if I say 80,000 divide by 16,000 kgs, I will get the cost per kg. If I say 80,000 divide by 16,000 kgs, I will get to 5 rand as the cost per kg. So now my 5 rand will be 5 rand per kg. And again, if I say 110,000 divided by 20,000 kgs, which is that 20,000 kgs, I will get to know how much was the actual cost incurred to buy material B for auto washing powder, which is 110,000 divided by 20,000. This gives me 5 rand 50 cents. So now these are my actual cost per kg. These are my actual cost per kg. So because I have the actual cost per kg, then I can compare that with the standard cost per kg, then after I have my variance completed. So now let us go and we just effect those calculations. My standard cost per kg, let me go and check if was there any standard cost per kg for material B. Standard cost per kg, it was 5 rand and 6 rand if I'm not mistaken. Why 5 rand and 6 rand? Because we were provided with the cost per unit and we said divided that by 2 kgs per unit, and we said 6 divided by 2 kgs per unit at 12, that gave us 6 rand. So here it was 5 rand if you remember my workings. So my standard cost per kg is 5 and 6. My actual is 5 and 5.5. So at least we can say that this variance are at least not far away, but there's still a variance. So now we need to say standard price will be 10 rand divided by 2, which is 5. And remember, this is for hand, and my standard price will be 12 divided by 2 kgs, which is 6. Then after this will be standard 5, this will be 6. And we have the actual, and the actual kgs, which is 5 rand for hand and 5 rand 50 for auto. So for hand, the budgeted was the same as the actual. So we have 5 rand and here we have 5 rand 50 cents. So there will definitely be a variance. Term this by the actual quantities purchased, and actual quantities purchased was 16,000 and actual quantities of material purchased was 20,000. We just calculated that because we did not know how many kgs were bought, but we know that each unit consumed 2 kgs. So now if each unit consumed 2 kgs and we manufactured 8,000, therefore 2 times by 8,000 will give us 16,000 kgs. And if each unit requires 2 kgs of auto washing powder, therefore now we term that by 10,000, it gave us the number of units that were bought, that is 20,000 kgs. So that is where my workings are coming from. So now remember, this will be a multiplication, this will be a multiplication, and from there we can get to our variance analysis for material B for both products. 550 minus 6 is half times this by 20,000, and it gives us 10,000 rands, and this will be a favorable variance. This variance will be favorable as 10,000. Then after we say for the first one is 5 minus 5 being 0 times by 16,000, and this gives us a variance. There is 0 variance, meaning there was no variance in this case. Therefore now the total here will end up being 10,000, a favorable variance. So now we have analyzed this, and remember, when it comes to this, if we wanted, we could have used standard total cost, because we are already provided with the total cost here, which is total figures. So if we wanted, we could have used total figures also, where we convert our standard into total. So we could have said we have material B, and material B is 10 rand per unit and 12 rand per unit, and we could have just said 10 rand times that by actual sales, and if you say 10 rand times by that, it will be 10 times by 8,000, and 10 times by 8,000, it will give us 80,000 rands. That will be standard cost. Then after we say 80,000 minus 80,000, the variance will still be 0, and we can see that the variance here was 0 too, which is 5 minus 5, 0, and the variance was 0. So either way you took it from the total or from the per unit, you still get the same answer. And again, you could have said here cost per unit times by the number of units that were actually manufactured and sold, which is 12 times by 10,000. And 12 times by 10,000 will give us 120,000 rands. And 120, you compare this with 110, and you say minus 110,000 total cost. 120 minus 110,000, it gives us 10,000. And we have seen that the variance for the auto was 10,000, which we have seen that, and you can say it was 10,000. So either way you do it per unit or you do it in total, you still get to the same figures. So now I have shown you the workings. Just for space purpose, I would like to erase this one. Then we go to the next variance as we are concluding the question now. The next variance, which is the variance before the last one, is variance number 4, which is the variable expenditure variance in total and per unit, or per product and also in total. It is the variable overhead expenditure variance per product and in total. So now we have to take that variance, which is number 4. Number 4, it will be again standard price versus actual price times this by the actual quantities, also again that or the actual hours in this case, because this variance is based on hours. Then I will say we have our variable overhead, then we need to check how much is our standard variable overhead cost per unit. Our standard, we calculated that as 3 rand 3 cents. Remember, this was the combination of fixed and variable, and we calculated 3 rand 3 cents here, and we calculated 4 rand 20 cents here. So let us check if can we calculate here the cost per hour. The cost per hour here, we need to first remove the portion that is fixed. And after removing the portion that is fixed, we said that we will say here minus 50,000, because budgeted was the same as actual, and the remainder will be 40,000 if you remember. And we said here will minus 100,000, and the remainder will be 40,000. So actual variable overheads remained 40,000 for both products. So because we have the total of the actual variable overheads, because we have the total minus 50,000, because the actual is in total, so I can just immediately use my total once again. That will be 40,000. This is the variable cost. This is the variable portion. This is the fixed portion. This is the fixed portion. So now that I know that my actual variable costs were 40,000 and 40,000 respectively, so I can just use the totals, because the per unit, it will consume a bit more time to convert. So now in this case, I will just say standard minus actual, standard cost minus actual cost, and my standard cost will be for both products, which is hand and for auto. I know that my actual is 40,000 and my actual is 40,000. That is provided. Then after, I will have the total variance. So in calculating my standard, I have to do my workings and say my standard will be 3 rand 3 cents times that by actual units that were manufactured and sold, because 3 rand 3 cents was the cost per unit. Then after, I have my auto washing powder, which is 4 rand 20 cents, and I term this by 10,000 units. I'm calculating the standard cost. Standard cost is always standard cost per unit times by actual production or actual hours, depending to whatever a component of cost you are dealing with. So 3 rand 3 cents times by 8,000. This gives me a total of 24,240. Then after, I say my standard cost per unit was 4 rand 20. Standard cost per unit times this by actual production of 10,000 units. And my actual production was 10,000. Therefore, now I'll have 42,000 of the standard cost. So this will be 22,000 or 24,240 minus actual. Then I'll have 42,000 minus actual. And the variance here will obviously be 2,000 favorable. And the variance here will be unfavorable, which is 24,240. 24,240. 24,240. 24,240 minus 40,000. That gives me a total of 15,760, and that variance is unfavorable. This is favorable, and the total will be unfavorable. Plus 2,000, then I get 13,760. That will be unfavorable variance. So now I've calculated this in total. You can also calculate it using the cost per unit. And if you wanted to use the cost per unit, I also want to show you that. If you wanted the cost per unit, that would not have been a problem. We would have said our variable cost is 40,000. So it would have been 40,000 divided by 8,000 for the hand washing powder. And it will be 40,000 divide that by 8,000 units. The cost per unit would have been 5 rand for the hand. Second one was still 40,000 divided by 10,000. 40,000 divided by 10,000. This will give us definitely 4 rand. So here we would have had an amount of 4 rand. Here we would have an amount of 5 rand. Then after you compare the two, then multiply by the actual sales, which is the number of units that were produced and sold. But still get to the same value. Therefore now this would have been 3 rand 3 cents minus 5 rand times this by 8,000. Just to prove only for this one, this would have been 3 rand 3 cents minus 5 rand times this by 8,000 is giving me the same 15,760. Exactly unfavorable. For the second one, it would have been 4 rand 20 cents, which is standard cost, minus actual cost of 5 rand times by 10,000 units. This would have been 4 rand 20 cents minus 5 rand times by 10,000 units. This would have given 4 rand 20 cents minus, or 4 rand, not 5, times by 10,000. This would have given us the same 2,000. So there wouldn't be a difference. This is unfavorable. This is favorable. The total will be minus 15,760. It will give us the same 13,760. But take note, if you're using the standard cost per unit, make sure that your actual is per unit and you multiply by the number of units that were actually manufactured. Number of units, because these are units or cost per unit, so whatever you multiply must be also in units. So now I have explained that in double portion. Then let me go to the last variance, only 2 marks. The variable selling and distribution cost for the hand washing powder only, not for the two products. So now we know that our fixed cost remain the same, and we know that our fixed cost remain the same, and for that reason, meaning we can deduct the fixed cost that were budgeted. We first have to go and check in terms of sales and distribution. Sales and distribution, they told us that 1 rand was variable, therefore 2 rand was fixed. So now if 2 rand was fixed, therefore now 2 rand times this by 10,000, it will give us 20,000 as the fixed cost that was budgeted. So now, which will be 2 times that by 10,000, it will be 20,000 of the fixed cost for the hand washing powder. And they said this remained the same. So now if this remained the same, therefore now that means it remained the same, then we can just say here minus 20,000. So now if we minus 20,000, remember 20,000 is the fixed cost. So now 20,000 minus 25,000 will give us 5,000, which is variable selling and distribution. Then after we say our variable selling and distribution was 5,000 total actual, then after we say our variable selling and distribution standard cost per unit was 1 rand. So if we said that this was 1 rand, remember we need to know standard cost. Always I say standard. Standard is the connection of the standard information and the actual information. In this case, our standard selling price was 1 rand times this by the number of units that were sold. We get our standard selling and distribution variable. So now this will be 8,000, which is standard selling and distribution. And we say standard cost in total, we compare that with the actual variable cost of 5,000, and we can already see that there was only a variance of 3,000. So now let us go and do the workings for that last variance, which is number 5. Number 5 will be standard cost minus actual cost. And our standard cost would have been 1 rand times by 8,000 units minus actual cost. Actual cost would have been 25,000 minus 20,000 minus 20,000, meaning this will give us 8,000 rands, minus 5,000 rands, and our variance will be 3,000 rands, and this 3,000 rands will definitely be favorable because in actual fact our variable costs were less than as we were supposed to be in standard. So now these were the full workings for this question, and I have analyzed all that I wanted to analyze and all that I think it was important for you to understand in this question. And with all of that, I think I can say bye-bye. Hope you will enjoy this video. Thank you.